Welcome back to the Wolf of Property and Casualty. I'm your host, Derek Lasniak, with over 15 years of commercial broking experience, focused on the middle market, upper middle market, and national account space. The Wolf of Property and Casualty is a practitioner-led property and casualty education meant for buyers, brokers, and insurance carriers. Straight talk, no bullshit, each and every episode. Today's episode, I'm going to title Mr. Passive Income, after a former partner of mine at my old insurance brokerage that I used to work at. Because over the 10 years that I was really practicing, really hustling, really humping it, I developed an amazing relationship. He was in our private client kind of life insurance, 401k benefits type division, but I developed a great referral relationship with him to the point that I started calling him Mr. Passive Income, because the product that I'm going to talk a little bit about today became something that was like passive income to me as a broker because of how much referral commission I made each and every year by bringing up something super simple, super easy. And either it was a quick no, we already have it, quick no, we don't need it, or holy smokes, I never knew about that. How do I learn more? The reason I called him Mr. Passive Income is because 3 months later, I would run into him at the water cooler and he'd be like, "Hey, do you know we closed so and so's Key Man life insurance policy and you're going to make $4,200 next time we have a suite?" The actual product is called Key Man Life Insurance. So don't throw away all the things you know for buyers, brokers, carriers out there about life insurance, or the things you don't know. Especially if you're a broker, you're like, I don't know anything about that, but you probably purchased maybe some life insurance on yourself. And depending on the nature of it, you probably have purchased term life insurance. I have term life insurance that runs for 30 years at a guarantee issue. And you're buying life insurance in the event that, I pass away and then my family gets a payout to, in theory, make up for the fact that I earn money for this family. And in the absence of my ability to earn money, there's going to be a shortfall and I want to leave something behind to take care of my family. Well, Keyman Life Insurance, very simply, you don't need to be an expert about life insurance, is term life insurance. All we're really changing is the beneficiary from my family to a business entity, a business owner. So I worked a ton in middle market, upper middle market, national account space. I worked a lot with companies that, were from 50 million to 500 million. And when they had an honest conversation, or when I would bring this topic up, and for buyers out there, think about this within your own firm objectively. Do you have people within your firm that if they got hit by a bus tomorrow, it would be really challenging to replace them, or there would be revenue at risk for those people? I'll use my old firm that I used to work at. There were producers that had very large, substantial books of business that would be at risk if they got hit by a bus the next day, meaning customers would leave. And there would be a meaningful hit to the revenue of our insurance agency. And therefore, there was Keyman life insurance taken out on them, not to benefit their family. If Joe gets hit by a bus, he's got life insurance personally that helps pay for the bills and keep the family humming along. But what about the entity? Not only is he maybe a shareholder that owes debt to the company, but he's got a $3 million book of business, and that $3 million might be gone, might go to 1 million. So buying Keyman life insurance has the same value of buying normal life insurance. It just beneficiary changes to the company. So I would talk to my customers all the time. Do you have like a single salesperson that, especially in the manufacturing space, they usually got one rainmaker salesperson where if he's gone, your company is going to go through some hard times replacing that person and potentially lose some revenue? Maybe a CEO, or typically like a founder led company where the founder is tied into every aspect of the company, and the specific contracts, the first, second, third largest customer all rely upon that relationship. I would always talk to my clients about, do you have this person covered? Keyman life insurance, specifically if the individual you're trying to insure is otherwise healthy and maybe they're not having trouble getting personal life insurance. Keyman life insurance, because it's a term policy, you're buying it for 10 years, 15 years, 30 years. That's the nice thing. That those kinds of insurance policies for generally healthy people are pretty affordable. It's a deductible insurance premium for the business. They're buying Keyman on behalf of somebody. The beneficiary is the business. And now what you can pay for in the event of a death, you can pay for a replacement of hiring that person, lost revenue. You can use it to add collateral to any lending requirement. Another place that you see these a lot is if you have two partners that own a business that are heavily involved. These can help facilitate buy sell agreements, meaning if one partner dies, how does the other partner fund the buyout of that partner? So these products are more tools than anything. Yes, there is a nice ability to say, look, this person's gone. Our business is going to lose revenue. We can replace it with Keyman. But it can also facilitate the help of recapitalizing the firm. If you're working with a lender and a lender digs enough in underwriting to say, what if the founder dies? A lot of times the lenders are going to require this. If you bring in private equity to have a buyout of your business, a lot of times when they say, I want so and so CEO to stick around, that private equity is going to say, hey, we know this person's critical to operating this business. What kind of key man life insurance do we have? You don't have to be a rocket scientist to poke the holes in what happens if so and so is gone. For brokers out there, if your customer says, I already got this in place, we're using someone else, just know that these life insurance products follow the same kind of mechanism as other life insurance. All the commission is stuffed into the first year. So just like life insurance, it's a first year sale. So if the policy is $6,000 a year for $1 million of Keyman life insurance on Joe, the broker is going to get pretty much $6,000 of commission that very first year. And then there's very little commission in subsequent renewals of that policy. So if your client says, oh, well, I've had this in place forever and I want you to take over it, you should take an AOR so that you have more control over the products that are in place, but it's not going to have reoccurring revenue to you. Where I called Mr. Passive Income is both when I started working with new customers, they had never heard of this concept. I had a customer that was going through a buyout of a partner, or they were adding private equity, or they were refinancing with a new lender, and the lender required it, which was like a layup because we had somebody who was good at it. Or they just said, yeah, John is my best salesperson. He controls 50% of our revenue. He's 35 years old and in great shape, but if I can spend $3 grand getting $1 million to cover my margin loss if John gets hit by a bus, then I absolutely want to do that. It's a nice way to show as a broker that you're thinking about the business as your client, not just the lane of products that you live in. And you'd be surprised how often people haven't gone through the exercise. A good Mr. Passive Income in your life can pretty much provide a ballpark quote with a one-page app about health history that as long as the person doesn't lie, you can pretty much understand what that premium is going to look like within an hour. It doesn't take that long. It's a really nice way to show to your client you're thinking about the entire risk, enterprise risk management, and you're not just thinking about property, casualty, and those types of things. And so this is something that not only was I utilizing to be more of a comprehensive risk manager of my clients, but as the title suggests, this produced a lot of passive income to me because I had a great partner in my old firm and something that we became very successful in referring back and forth.